Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good evening, everybody, and welcome to the pilot episode of our market recap. Hold on, let me scroll up to the top of my notes here. By the way, today's program is brought to you by viewers like you. So hit that like button. It really helps the channel out. There's a lot of things that I would like to do with the channel, and I really would like to grow this segment. So hitting that like button really allows me to invest more into that and really helps out the channel. Also, in the video description below, there's a link to the Patreon. If you donate to the Patreon, you also get our Bitcoin valuation charts. So thank you very much for all of that. Now, this is the first time we're doing this, and my goal here is to give you a very focused overview on the news of the day and how it affects the markets so that you can utilize that in your trading. So leave your comments in the live chat you guys got going. I can see Michael Tedeschi saying, I felt like this has been a pretty interesting week, and I feel like it definitely has been. The market has been very sensitive to news. There's so many things that happened today. A bunch of headlines that really moved the markets. We got a lot of stuff to go through. So what I'm going to do is I'm going to go through this really, really fast. And then if you guys have comments in the live chat, I will go over those at the end. All right. So let's start out here. In the morning, overnight trade tensions ratcheted up a notch with the markets taking notice. Started with Donald Trump, who has been expressing dissatisfaction with China's response to the COVID-19 pandemic. He tweeted, and this is what he said: China is on a massive disinformation campaign because they are desperate to have sleepy Joe Biden win the presidential race so they can continue to rip off the United States as they have been doing for decades until I came along. This is something that Donald Trump has said many times before, and I'm not so sure that investors really take too much notice of it, but then there's a couple of other things that have been happening. Chinese government made moves last night. Their Congress, equivalent of their Congress, made moves to tighten their hold on Hong Kong. Their spokesperson said, in light of new circumstances and need, the National People's Congress is exercising its constitutional power to establish a new legal framework and enforcement mechanism to safeguard national security in Hong Kong. So they're basically going to completely take over Hong Kong, and it's going to be interesting to see if anybody reacts to it. The Congress, Senate, the United States Senate did introduce a measure to sanction Chinese officials over this. I don't know if this will become law, but like, it's ratcheting up, and you know that this is just over Hong Kong, but it has come up, or it did come up when we were talking about trade war stuff. Okay, now this was kind of all before the market, and I'm going to come over here to the charts here. Kind of in the overnight action, we were modestly lower, and we actually started out with a test higher to kind of test the highs, but then this story came out a little bit later here. Oops, I'm looking at the wrong chart here. This big move down here was Mike Pompeo congratulated Taiwan's president on starting a second term in office, and China responded saying, on Pompeo's congratulation to Tai Ling-wen on her inauguration, we express strong indignation and condemnation. China will take necessary countermeasures, and the consequences will be borne by the U.S. side. Very heated rhetoric. Quite concerning. I'm not quite sure what countermeasures could be. Now, does this affect the trade deal? Kudlow says that the trade deal is still intact, although the purchases haven't been going along as much as expected because of the coronavirus pandemic. All right, so that really hurt markets today. Something that I would pay attention to in the coming days One of the things is that when the market reacts to a piece of news, their propensity to react to it again when a further story happens is higher. So now trade war, trade tensions sort of stuff is on people's radar. If we see more stuff with this next week, I would expect, the markets to pay a little bit more attention to it. All right. Going into some of the economic numbers that we had, I'm noticing that the market is not really reacting to economic numbers. So we had the Philly Fed and the unemployment claims both came out slightly worse than expected. Markets did decline a little bit, but basically washed that out. Later in the session, it wasn't the primary thing on investors' mind. We also had flash PMI numbers, but those mostly came in line with expectations. It seems like the market cares much more about earnings and government policy, what the Fed is going to do. So that's just the market that we're in right now. Then we also had tons of comments from the central bank today from the Fed. So John Williams made an interesting note that I want to highlight. He said the most recent economic figures do not fully capture the pain American families are going through, since some people who stopped working for health reasons or to care for a family member may not be counted. And then later, Powell, when he started his speech later in the day, the market really, really took down. And that's kind of, I don't know if you can see here on the chart, but this kind of second move down around 3 o'clock Eastern time or so. Pretty fast. It was like 8 points all at once. And all he really did was say forecasting faces a whole new level of uncertainty. But the market really cared when he said that. And it's not the first time that he's kind of given cautionary notes, but today they really paid attention to it. Okay, and we'll talk about maybe some of the reasons why that is a little bit. All right. Now we're also starting to see discussion about a potential fourth stimulus, although technically this will be like the fifth bill that they've had since this has all started. So Treasury Secretary Mnuchin says, quote, "I think there will be a strong likelihood we will need another bill, but we just have $3 trillion we're pumping into the economy." And this brings me back to the comment that Gunlock made on his Twitter a couple of weeks ago, which was that if everything is so great as the price of the S&P 500 would seem to suggest, then why is further monetary support from these policies necessary? If the policies work so well, why do we still need them? This is definitely a question, but they're really starting to talk about it more seriously. Well, what will be in the bill? The first thing that I would note is that the Republicans really want to get rid of this provision loophole that basically allows people on unemployment to make more from unemployment than they did when they were working. The Republicans want to get rid of this. Mitt Romney has talked about getting rid of it. The Republicans are all on board. I do not believe that the Democrats will give in on that very easily, but who knows? I mean, if we really need new stimulus, they may be willing to deal. But that is going to be something that is going to be a huge stumbling block towards another stimulus deal coming through. So that is kind of the spot that I would watch, because you know how the market behaves when it does not get the stimulus that it wants, right? In the meantime, the Senate was able to make a deal to fix the Paycheck Protection Program so that these companies can continue to spend that money after the initial 8 weeks. So good fix, and it appears that they are going to be leaving for the Memorial Day holiday. And this is an important thing. I think that some of the market reactions today could be related to the fact that we have Memorial Day coming on Monday. That's a significant kind of turning point for the markets, because then we move into slower summer action. A lot of market makers leave at that time, and generally people don't want to be in positions going into Memorial Day. So some of the volatility may be people panicking about long positions that they've had for a really long time and taking profits. All right. I also want to talk politics here. So in polling, we saw a new poll out from Quinnipiac giving Joe Biden an 11-point national lead. Now, this is like a huge outlier. All of the other polls that we've been looking at have him 5 points, which is probably realistic. I tried looking through the crosstabs, but I don't really see what is giving Joe Biden that 11-point lead. But we'll need to see further polls and see if that kind of trends through. When looking at like the social media buzz today, it was all about mail-in voting. Donald Trump has been complaining about mail-in voting in Michigan, and it appears that they're going to be fighting that. Democrats are fighting it very, very hard. This is a hard thing because the evidence that we have, like in terms of like how does mail-in voting affect elections, it doesn't appear, at least in the data, to favor any one particular party. However, I would note that almost every Democrat wants to have mail-in voting rather, and Republicans, some of them are for it, but generally Republicans are mostly against it, and then there's a reason for it. I think in this situation in particular, it definitely helps Democrats because they have a real turnout problem right now. Joe Biden, they're not really very enthusiastic about Joe Biden. And so having that turnout boost from mail-in voting could save them. So I think for this particular election, it makes a lot of sense that Democrats would really, really want the mail-in voting. Of course, Republicans don't want it because they are afraid of fraud. Now, with this one, even though I know the argument is that there's not any evidence of fraud, let me come back over to the camera here. I know the argument is that there's not any evidence of fraud, but I would think that Donald Trump would continue to push this issue, even if he wasn't concerned about it, because his base really responds to it. They're very, very concerned about this election being stolen from them, and it will boost Republican turnout. No question about it. So I think this will continue to be an issue, and it will affect the election. So we got to pay attention to that. And then last thing, just a little note, but it is another important thing that we should keep an eye on is that Joe Biden is starting to vet people for being VP. There was a story out today that he was asking Amy Klobuchar to undergo vetting. I don't know if that's going to be a super great pick, but it sounds like they're pretty determined to have a female as the vice president. So we'll see where that goes. But you will see it will change the landscape a little bit when the vice president is selected. All right. So anyways, it was a really interesting day. I mean, we had all this stuff. So I tried to go through that. Breathe. So much news today. And I want to get through this all in a good 15, 20 minutes. So we did good. I think we're doing good. We're at almost 12 minutes. So we have a little bit of time. If you guys have any questions or there's things that you want to talk about here in the next 5 minutes, now would be a good time to put it in. Ewo Severin says, easy. Hey, thank you very much. Yeah, I did really well today because I was expecting that even though the sentiment coming in overnight was a little weak, that probably the buy the dip was still going to come in and that there wasn't a significant change from yesterday. And I think that theory turned out right, but it wasn't enough to push us to new highs, was it? So once we fell then, I really think that people are looking for a reason to sell it. Like, really, I don't think that none of the traders that I talk to really like this market. Just straight up, nobody likes this market. They want to sell it, but they're not seeing the opportunity. They're not seeing the excuse that they need to sell it. Today, the market gave them a couple of excuses. This statement from China, promising retribution or whatever the word was, countermeasures over a statement Mike Pompeo said. It's not typically something that I would expect to move the markets, but we definitely turned down. And when you combined that with the upside move kind of failing out, it really turned down. And then again, with the Federal Reserve's comments later in the day, and then weakness going into the close. Now with the close, this is a close where, like you can see here, already there was a little bit of downward movement after the close of the NYSE. and now later that the futures are back up and running, we've recovered that a little bit. I think that you should expect to see a little bit of shenanigans going around the close, and I don't know if where we're at right now matters too much, but I will be paying attention to where we're opening at tomorrow. It's the Friday before a holiday, and it is not uncommon for the day before a holiday to see big moves because the people are going to be closing positions. So I think that's pretty much where we're at. That's all I got for you guys today. Hope you enjoyed that. Please, so I don't see any questions. And I'm expecting most people will watch this on replay. So if you guys have any comments or stuff, leave them in the comments below. Let's hear what's Michael got here. What do you think the odds are casinos are closed for the next 2 months? I think we'll see any openings there. MGM looks almost too good of a buy. Wow. Yeah, that's a really good question. So the thing is that the governor, the mayor over there, she was the one that got criticized for volunteering to open early, right? So I think that the government there wants to open up again. But it also seems to me that anything that involves like crowds of people, concerts, probably aren't going to be opening again until next spring. So for casinos, I'm not too sure what will happen. I'm going to bet that what will happen is that the government will open, but that even after they open, the business won't be very good for quite some time. So as to whether or not casinos are a good buy or not kind of depends on what you think the market is going to do over the summer in general. Like if we have another push down and we retest those lows, which right now looks unlikely, but I think is just based on the chart looks unlikely, but I think could still happen, then you might want to hold off. But otherwise, when things open might be a good time to take it on. Just understand that it's probably not just going to take off right away, right? Anyways, but I don't know too much about individual stocks, so that's the other thing is you're going to have to look at all of their assets and liabilities and all of that. It's going to be tough for sure, and the issue is that probably the impact on a lot of companies is not really being priced into the markets right now. It's just too difficult for them to do it. All right, so I think we are at time. I want to keep it below 20 minutes. So thank you for that question. Thank you for those of you guys that tuned in. I will see you guys tomorrow morning. And in the meantime, stay profitable.